Hello, how are you doing? I hope you are doing well. My name is Elijah and I want to guide you through financial accounting. So, financial accounting. Now, financial means monetary. Monetary means concerned with money. Concerned with money. Okay? Accounting comes from two or one word with some additional ing. I think the linguists should be calling it a suffix. Okay? To account means to report, means to give a report. Okay? And ing, when attached to another word, means a process, something ongoing. A process, or rather something ongoing. Something which is ongoing. So if we join the two words, financial meaning monetary and accounting meaning the process of giving a report, then we will find out that financial accounting is the process. Financial accounting is the process of preparing reports. On monetary transactions. Good. Now, in preparing reports, there are some things involved. You need to capture the data. So there is capturing of data, sorting. Now the capturing, we can also say stroke gathering. You sort that data, you analyze, and then prepare reports. Okay. So with that additional information, we can now refine the definition of financial accounting to be that financial accounting is the process of gathering, sorting, analyzing, and reporting on financial transactions. Good. So you now have a definition of financial accounting. Now, in doing the process of preparing reports, there is what is known as the double entry concept. So, the double entry concept. Now, double means two. An entry is a record. And a concept is a principle. So then, we may say that the double entry concept states that for every transaction there results two equal and opposite entries. Two equal and opposite entries in the ledger accounts. Good. So let us restate this double entry concept. What does it state? It states that for every transaction. For how many? For every. for every transaction. Their results, how many? 2. 2 unequal? No. 2 equal and opposite. And opposite what? Entries. And what is an entry? We said is a record. So entries are records. Where? In the ledger accounts. Okay, so that is what the double entry concept states. Now there is also something known as the accounting equation. So the accounting equation. The accounting equation. Now an equation is something having an equal sign. So in accounting there are some elements which we say that some elements on one side are equal to some elements on the other side. Okay, so what does it state? It states that assets are equal to the sum of capital and liabilities. Of capital and liabilities. Okay, what is the purpose of this? It is meant to illustrate the net worth of a business. It is meant to illustrate the net worth of a business. Okay, so it's used to illustrate the net worth. Net worth, we may say in layman language, value, or value of an organization. So to illustrate the net worth or value of an organization. Good. So how can we write it? It is written as assets equals to capital plus liabilities. Assets equals to capital plus liabilities. So we can say in brief that A equals to C plus L. Now this equation can be restated in whatever manner one desires. So that if you are given maybe the value of assets and you want to find maybe liabilities, you can make one value to be the subject of the other. So then we may also say that A minus L equals to C, or A minus C equals to L. Good. So in whichever manner you may wish to state it, still you can get the values that you need. Good. Now maybe one may ask a question that what do we mean by assets, what do we mean by capital, and what do we mean by liabilities? Now assets, so what are assets? Assets are resources owned by an organization. Okay, they can further be classified into current assets and non-current assets. So they can further be classified into non-current assets. Others call them fixed, while others call them long-term assets, and current. Others call them short-term. So short-term assets. Good. Now what is the key point in these non-current and current assets? Now non-current assets are resources whose benefits shall be enjoyed for a period of more than one financial year. Are resources whose benefits shall be enjoyed shall be enjoyed for a period of more than 1 year. Okay, of more than 1 year. And what are current assets? Current assets is the opposite of that. So are resources whose benefits shall be enjoyed for a period of less than 1 year. So current assets are resources whose benefits shall be enjoyed for a period of less than 1 year. Good. So you may need to give examples of those. Now, examples of assets which you may use for more than 1 year include land, so e.g. land, buildings. What else can you use for more than 1 year? A motor vehicle or a car. Okay, what else? Machines. Some machines which can last for 1 year, but others of course last for less than a year, among others. Okay, what about current assets? An example is stock. Now, assuming you have a shop, when you buy some assets in the morning or some stock in the morning like bread, maybe by evening it is already depleted, so you need to replenish your stock again and again. So e.g. stock. And the other name for stock is inventory. Okay, another example is debtors, those who owe you money. If I owe you money in the morning, by the evening I might have repaid, so that value of money that you were demanding from me may not last for a longer time. Okay, debtors. But the proper name for debtors, or the most current name for debtors, is accounts receivable. And yet another name is trade receivables. Okay, another example is prepaid expenses. Another one is accrued incomes. So I think in another tutorial I'll discuss on prepayments and accrued incomes. Another one is cash at bank. And cash in hand, among many others, but at least for a beginner those are enough. Good. So we have now discussed and known what assets are. Next, I want us to know what we mean by the term capital. So question, what is capital? I think you've heard this word being used even out there, that when someone starts a business he needs capital. Okay, so then what is capital? Capital is part of man's wealth. Used for further generation of wealth. In simple terms, it is money used to start a business, or it's the value of resources. The resources can be in terms of money or other assets such as machines. It is the value of resources used to start a business. Or enlarge, if you can say so, a business. Or rather expand a business. Now this capital can be either in form of current assets or non-current assets. Okay, so it can be in form of current assets or non-current assets. Good. Next, I want us to look at what is known as liabilities. So question, what are liabilities? Okay, so liabilities. Now they are resources in the possession of an organization, or a business, but owned by or belonging to another organization, Now these liabilities can as well be further classified into two, the same way that we classified assets. So they can further be classified into current liabilities and non-current liabilities. Okay, so into non-current liabilities and current liabilities. So into a non-current stroke long-term liabilities. So what are long-term liabilities? Are liabilities, now in Kiswahili they say dawa ya deni ni kulipa. So in English means that the remedy of a debt is to repay it. Okay, so liabilities, we have an obligation to pay them. Okay, so what are liabilities then? Are liabilities whose repayment period, that is the key word, whose repayment period is more than 1 year. Is it a calendar year? No. A financial year. A calendar year is January to December. But a financial year depends on when you started business. If you start business in May, then that business will come to an end in the next year, April. Or like the government starts its year in July, so the year ends in June of the next year. Yeah. So that is what we may call a financial year. Okay, so non-current liabilities, their repayment period is how? More than 1 financial year. Good. What are the examples? We'll give some few examples of the same. So e.g. long-term loans, mortgages, debentures, among others. Okay, now for starters, just know the term long-term loan. A mortgage is an arrangement where a financial institution buys for you an asset such as a vehicle or a building, then you repay over a long period of time. Okay, then debentures are loans given by members of the public to organizations. Okay, so debenture is a loan but given by an individual to a company, while a long-term loan are the commercial loans from the banks. Okay, so we've talked of non-current or long-term liabilities. So next, let's talk about the opposite of that. The opposite of non-current is current. So next is current, or others call them short-term liabilities. And you remember we said that the Swahili people say dawa ya deni ni kulipa. Yeah, that is the remedy for a debt is to repay. Sawa. So the current or short-term liabilities are liabilities are liabilities whose repayment period is less than 1 financial year. Good. What are examples of that? So examples of current liabilities include, so e.g. Let's see the examples we had under current liabilities. So the under current assets, then they can give us the opposites of that. By the way, accounting is full of opposites. Yeah. If you want to debit, then the opposite of that is credit. Yeah, among other opposites. Okay. So what has an opposite is debtors. So e.g. the opposite of debtors is creditors. So e.g. creditors. But that is an outdated term. So the most current term is accounts. Now instead of saying accounts receivable, the opposite of receivable is payable. That is, the opposite of receiving is giving. Okay, so stroke accounts payable. Stroke, instead of trade receivables we say trade payables. Stroke trade payables. Okay. The next was prepaid expenses under current assets. So the opposite of prepaid is accrued. So we will say accrued expenses. Okay. Let me scroll down. I think that is enough. So accrued expenses. Okay, next was accrued income. So the opposite of accrued is prepaid. So prepaid incomes. Okay, the opposite of cash at bank is a bank overdraft. Draft comes from the word draw, or you can say is the past tense of the word draw. So when you go to the bank, what do? You withdraw money. But when you over withdraw, then we say that you have a bank overdraft. Okay, so we've said that the word draft is the past tense of the word draw, and this comes from or gives us what we generally say to withdraw. So an overdraft is an over withdrawal of money from your bank account, from the bank account. Okay, so why is it a liability? It is because you now owe the bank money, but as soon as money will hit that bank account, they are likely to take back their money. Okay, so I think that is what we may say about current or short-term liabilities. Good. So far, what have we learned about the accounting equation? I want us to summarize. So we have learned that assets equals to capital plus liabilities. Assets equals to capital plus liabilities. Okay, and we've said that assets can be further classified into non-current assets, and current assets. The same thing with the liabilities, they can further be classified into non-current liabilities and current liabilities. Good. And we've given examples of the non-current assets and liabilities, and some points that stood clearly is that non-current assets non-current assets, their benefits shall be enjoyed for more than 1 year. So their benefits shall be enjoyed for a period of more than 1 year, while the current assets, they benefit an organization for a period of less than 1 year. The same thing with liabilities, that non-current liabilities, the repayment period is more than 1 year, while for current liabilities, the repayment period is less than 1 year. Good. So up to there, we can stop there. See you in the next video.